Welcome to Earnings Central. In this video, we'll break down C3.ai's third quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q3 was $98.3 million. The company actually reported revenue of $98.8 million, surpassing expectations slightly by 0.5%. This quarterly revenue also marked a healthy 26% increase compared to the $78.4 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q3 was a loss of 23 cents. The company actually reported a loss of 12 cents, exceeding expectations by 11 cents per share. This result also reflects a slight improvement compared to the loss of 13 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. C3.ai reported total revenue of $98.8 million for Q3, representing a robust 26% increase compared to the same period last year. This acceleration demonstrates continued momentum in the enterprise AI sector and C3.ai's ability to capitalize on growing market demand. The company's subscription revenue, which forms the core of their business model, grew 22% year-over-year to $85.7 million. This represents 87% of total revenue, showing the strength of C3.ai's recurring revenue streams. Notably, their non-Baker Hughes revenue grew an even more impressive 43% year-over-year. Despite scaling rapidly, C3.ai maintained a healthy gross margin of 69%. Their professional services segment performed particularly well with margins exceeding 85%. These solid margins provide the company with financial flexibility to continue investing in growth initiatives. The company reported a non-GAAP operating loss of $23.1 million, significantly better than their guidance range of $38.6 million to $46.6 million. This improvement reflects C3.ai's focus on expense management, particularly in marketing, while prioritizing investments in sales expansion and partner ecosystem development. Free cash flow for the quarter was negative $22.4 million, which represents a substantial improvement from negative $45.1 million in the third quarter of last year. For the first 9 months of fiscal 2025, free cash flow improved to negative $54.8 million compared to negative $109.2 million in the prior year period. The company remains on track to achieve positive free cash flow in Q4. C3.ai closed the quarter with $724.3 million in cash equivalents, and marketable securities. This strong balance sheet provides significant runway for continued investment in growth initiatives without the need for additional financing in the near term. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The expanded strategic alliance with Microsoft Azure announced in September is already delivering impressive results. Since the announcement at Microsoft Ignite, C3.ai closed 28 agreements across 9 different industries, marking a 450% increase quarter-over-quarter. Sales cycles with Microsoft shortened by nearly 20% thanks to an effective co-sell motion. Most remarkably, C3.ai is currently engaged in over 600 joint selling relationships with Microsoft across global regions, creating an unprecedented growth opportunity. C3.ai expanded its strategic alliance with AWS during Q3, focusing on offering advanced enterprise AI solutions together. This partnership further enhances the company's global reach and execution speed, providing access to AWS' extensive customer base and sales infrastructure. With all C3.ai solutions now immediately orderable on AWS cloud portals, sales cycles are expected to shorten significantly. The newly announced alliance with McKinsey Quantum Black represents another pivotal development. This partnership leverages McKinsey's expertise in business transformation with C3.ai's leadership in enterprise AI. McKinsey's track record in advising top enterprises and driving large-scale transformations complements C3.ai solutions, bridging the gap between strategic foresight and operational impact. During Q3, 71% of C3.ai's agreements were delivered in collaboration with partners, highlighting the effectiveness of their ecosystem approach. This represents a significant shift in go-to-market strategy, enabling C3.ai to scale more efficiently by leveraging the sales forces and customer relationships of established enterprise players. C3.ai's focus on generative AI continues to drive innovation and customer traction. In Q3, they closed 20 C3 generative AI pilots with clients including Mars, Liberty Coca-Cola Beverages, the U.S. Department of Defense, and various government agencies. The company's approach to generative AI addresses common enterprise concerns like hallucination, data security, and cyber vulnerabilities by combining language models with the C3 platform's orchestration layer. A significant highlight of Q3 was C3.ai's continued leadership in agentic AI. The company made further advancements in high-quality agentic planning and orchestration, as well as agentic retrieval and reasoning over omnimodal data. These innovations enhance the autonomy, accuracy, and efficiency of AI models. Their latest work includes a foundational time series embedding model, which unifies and simplifies the development, deployment, and maintenance of AI use cases involving time series data. C3.ai provided revenue guidance for Q4 of fiscal year 2025 in the range of $103.6 million to $113.6 million, with full-year revenue expected between $383.9 million and $393.9 million. The company anticipates some moderation in gross margins due to a higher mix of pilots in the near term and additional investments in sales, partner ecosystem, customer support, and R&D. As C3.ai enters Q4, their focus will be on ensuring the company is properly organized to expand both direct sales and services capacity to support their dramatically enlarged distribution ecosystem. With all solutions now immediately orderable on Microsoft, AWS, and Google Cloud portals, and the ability to contract rapidly using their contract vehicles, C3.ai is positioned for continued acceleration in the coming years. That wraps up our recap of C3.ai's third quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.